Hey y'all, Jay Brown, Certified Financial Planner here at Cornerstone Financial Management. And depending on when you're watching this video, we want to wish you a happy Thanksgiving, a Merry Christmas, a Happy New Year, and just hope that you've had a wonderful 2023 and are looking forward to 2024. As we approach the end of 2023, there are a few financial planning items and things for consideration over the next couple of weeks that may or may not be relevant to your case. And this isn't meant to be a specific action item for you or your situation, but it is meant to be a consideration and something that you may want to reach out to us over the next few weeks to see if it's applicable for your account or your situation. First off, the end of the year is a great time to evaluate your estate planning documents, your beneficiary designations, any of the updates that have happened throughout the year. Most of the time, we see that throughout the year, people are so busy with different things going on in their lives that this is always a good time to evaluate those documents and that key information. So moving forward, everything as you wish it to be on your accounts, your life insurance documents, your bank accounts, really all of your estate planning information. So that's the first thing here toward the end of the year to evaluate. The second thing really goes to your retirement accounts, your 401ks, your 403bs, maybe your simple IRAs. With the remaining couple of weeks left, you may want to take a look at your contributions so far for 2023 to see if you've hit your maximum contributions for the year, or if there may be an opportunity to increase those contributions here as we get year in. Just so you are aware, those that are under 50 years old, for your 401k or your 403b, the maximum contribution is $22,500 for 2023. If you're 50 or over, you can do a $7,500 catch-up contribution. So it may be beneficial for you to contact your HR or at least take a look at your 401k account. And if there is some room for you to increase those contributions through your employee deferrals here for year end to max out, that would be something to consider and could be beneficial. For those of you that have a simple IRA, the maximum is $15,500 per year with a catch-up contribution of $3,500 for those that are 50 and over. And so that the same reasoning applies. It would be beneficial to take a look, and if you can increase those employee deferrals here toward the end of the year to max those out, that would be something that I would look at. Another year-end consideration, and those of you may remember during some of our meetings or meetings with other advisors this year, the conversation about potentially doing a Roth conversion. And as a reminder, a Roth conversion is when you take pre-tax retirement money from an IRA or potentially a 401k, and you convert that to Roth assets, whether it's a Roth IRA or a Roth 401k. The process of that Roth conversion is you take those pre-tax assets, whether it's in the IRA or the 401k or the 403b, and you convert those to Roth assets. You'll then pay the income tax on that amount for the tax year 2023, and then those assets have the opportunities to grow tax-free in those Roth accounts. It is something that is certainly a case-by-case situation. It's a year-by-year situation, and it may or may not be something that makes sense for your situation, but it is something that here at the end of the year we want to look at. We want to see what your income projections are, and if it does make sense to that Roth conversion, this would be the time to do that and the time to evaluate that. The last thing when it comes to retirement accounts here at the end of 2023 is RMDs. So those of you that are required to take out your minimum distributions from retirement accounts, hopefully you've begun that process or that process is complete, but if you have not done so already, we want to encourage you to make sure that those come out of the account by December 31st to avoid any types of penalties. For those of you with non-retirement accounts, there are a couple of strategies that we can look at toward the end of 2023 that could be something for your situation as well. The first one, if you have appreciated securities in that non-retirement account, whether it's stocks, mutual funds, ETFs, something that has appreciated in value, and you are philanthropically inclined, whether it's a church or a nonprofit organization, and you may consider donating those appreciated securities to a charity, to a church, to a nonprofit organization, and that could qualify for tax deduction. Second, in those same non-retirement accounts, with the recent volatility over the last year or 2 years, there may be some losses in those accounts, and we can actually do what we call tax loss harvesting. We can sell a depreciated asset and potentially offset some taxable income or offset some appreciated security sales or gains in the future. These strategies aren't meant to be specific instructions for your specific situation, but more general things to consider as we get to the end of 2023. If you have any questions, please feel free to reach out to us. And as 2023 draws to a close, we here at Cornerstone Financial want to wish you and your family a joyous holiday season and a happy new year.